Welcome back, investors, to Ticker Time News. I'm Adam, and I hope you had a wonderful Thanksgiving and your bellies were stuffed, packed full with all that turkey and other goodness at the table. But let's get on to the stock market. The stock market ended this holiday shortened session on a mixed note, but overall, things held up pretty well, despite a decent-sized loss in Apple, which is a huge mega-cap company. Apple lost 2% today. The main indices, though, showed nice resilience to the selling efforts today amid, obviously, below average volume. Look at this on the chart. This is the SPX tracking the S&P 500. There were 890 million trades today. Do you know what the average is right now? It is 2.5 billion trades. That is the average versus our puny 190 million trades today. So if you didn't trade today, you might be in the majority of those who did not trade. Me personally, I didn't trade today. I did not. I took all my cards off the table and I'm ready for next week, potentially setting up for a Fed stock market induced comatose from all the turkey that they ate last week or this week. We're still in this week. Next week, Fed Chair Powell speaks. When Fed Chair Powell speaks, the world listens. A lot of these indices, and stocks included, because they make up what the indices are getting awfully close to that red line. Very close indeed. As a matter of fact, the IWM, which are your small caps, they top that line for the second time in as many weeks. Will they continue to move above it, or is this like the last time the IWM crossed above the red line? Are they pulling back on Monday? Well, we've got a little bit to dive into today. Not much. It's going to be a short episode. I don't have a whole lot to go through because there really wasn't a lot of action in today's market, but there were a few little pockets of action. Now, on the Apple front, let's pull up Apple. AAPL is the ticker for Apple. And remember, if you have a question, leave it in the comments. This live stream is for you. So if you have questions, leave them in the comments. We'll go over them live during this show to help you the best that we can. And simply and plainly, that's what this live stream is for. It is for you. So if you have questions, put them in the comments and we'll answer them. Okay, here's Apple. This is looking from mid-screen. Let me move it over just a little bit. About mid-screen on the chart right here, there is a vertical purple line. That is where Apple's earnings were. Okay, remember their earnings. They reported $1.29 of EPS on $90.14 billion. Okay, they beat estimates. They got rewarded the very next day with a 7.5% move to the upside for those earnings. But that was the top. That was the cap. That was as far as it could go. It couldn't break and hold and close above their 20-day moving average. All right. And let me get my Sharpie here. This is the 20-day moving average. It's coming across just like this. Okay. Now, Apple today, you can see it created a doji star type candle, or you could say maybe it's a spinning top. If we go to our candlestick chart patterns, just so you can visualize this, we do have a, actually, let me back up one quick second. Okay. I just need to double check that candle. Okay, so we have this bearish right here, a spinning top. When you have a red candle where there's equal part wick on the top and the bottom, a red candle, meaning it was down on the day, just like Apple was today, that's a spinning top and it's bearish. It means that there could be further downside. The other possibility, and let me look at this real quick. I want to look at the previous candle. Okay, so we got a drop down. Let's see. Yeah, this is true. This is true. I've never seen so little volume Absolutely. This is typical for today. Wait until we get to December 25th, around that area. I don't know off the top of my head what day December 25th is. I mean, I could obviously look at a calendar. I'm not that incompetent that I couldn't look at a calendar. Let me just pull up a calendar here real quick. I just want to see December 25th. Let's go there. All right, so the 20th, it's on a Sunday, so that may not matter as much. So that means the 24th is a Saturday, so there might not be a half day that we have to put up with on around December 25th, since it's on a Sunday. But typically, whenever you have these half days like we had today, volume is way down, especially when you combine it with a holiday the day before where the market was closed. It's like a ghost town, you know, a Wild West ghost town. That's what the market is like on a day like today. There's like nobody, right? So it was hard to catch a trade, really, because the volume was so low. I mean, like things were just barely moving. This morning when I was watching the tickers, you know, the SPX, it was just right there, up 0.4%, down 0.02%. I mean, it was just barely moving. It is just incredible. So those days, they're not fun to trade because there's not a lot to do. But I'm glad you got to see it, visualize it, learn about it, know about it. So when it comes up again, you know, well, maybe today's the day that I just skip trading altogether, because who knows, you never know what's going to happen on a day like today when there's no volume, because a low volume can obviously mean some pretty big moves, like Apple dropping 2% today. That was a big move on such low volume. And if we look here specifically on Apple, I got to scoot over here so I can see the data. Apple had, let's see, 35.1 million shares trade hands today, with their average right now being 86.1 million trades. So down 50%, down 60% or so, around that mark for Apple's trading volume, but it was still able to drop 2%. So when you do have these low volume days, it doesn't take much to get a big move. All right. Okay, so back to Apple here, and there's some reasons why Apple fell here, but I just wanted to show you that spinning top candlestick pattern right over here to the right of the screen. Got it circled here. It is bearish. All right. This is just a single candle that I'm looking at, that spinning top. And I always like to give you the visualization with the chart as well. But for the most part, if you look at Apple over the past couple of weeks, we could put a box around it just like that. Basically, Apple's gone nowhere, right? It's moving sideways. And honestly, that's to be expected. Apple had a big expansion move, right? And now it's going through the contraction phase. And when we get to the contraction phase, well, what's next? Are we going to continue up or down? Let me show you this real quick, all right? I'm going to go to the chart pattern, all right? So we're looking for up, a sideways move. You see it yet? Sideways move, and then what could happen, okay? Well, when we go up right here, we can get a bullish rectangle, all right? So price moves up, and then price consolidates but goes nowhere, just moving sideways, and that could lead to a breakout to the upside, right? So that's a possible pattern that Apple is trading in. Possible, okay? We can do that. We could also, let me clean the chart up here real quick. And I'm going to get a little more technical with my drawing here. And I'm going to put a couple of of actual trend lines on this chart, but I'm only looking specifically right now here. We're going to put a trend line here and we're going to run it. And you can see that on the top side, we're going down. All right. Now, let's put a trend line here and run it along here like so. Oh, I guess it didn't stick. Okay, there we have it attached. Now we're going to run it along the bottom like so. All right, come on, there you go. All right, now, well, things don't look like a rectangle anymore, do they? It looks like we could have a potential where, let me get the highlighter back out, where we had an expansive move, right? And now we've got a downsloping resistance line, and we have, or a descending, and now we have an ascending support line. All right. Look at the chart pattern. Okay. We want a move up, and then we're consolidating together with a triangle. All right. We've got a couple of options. All right. Number one, it could be a symmetrical triangle if we're looking at it like this. All right. A symmetrical triangle is neutral. It can break either way, up or down. The other possibility is a pennant, which is right here beside the rectangle, and that is bullish, okay? The difference between a pennant and a symmetrical triangle is the side, the size of the triangle itself. If it's tight and small, that's usually a pennant. If it's larger, that is typically a symmetrical triangle. All right. So just to give you some clarification here on what we're seeing technical wise. Now, here's a couple of reasons. There were a couple of, you could call it headlines, that kind of drove the 2% drop in Apple. Because if we go to the 5-minute chart, all right, let me clean this up here real quick. You'll notice something real quick about today. All right, let's go to the 5-minute chart here for Apple, and then we'll talk about the headlines that caused or were a potential cause for Apple dropping today. I need to get one quick little button here so we can fix this. All right, so let me adjust this over a little bit. So we mainly have today on. If you look at today for Apple, this is the 5-minute chart. All right, Apple closed, and let me get this out of the way here. Apple closed right here on Wednesday. Okay, Friday, today, Apple opens up with a big gap down. And then the rest of the day, Apple basically is trading flat. All right. Why? Earlier today, Reuters reported that iPhone production in November is projected to be curtailed by at least 30% at the Foxconn facility due to worker unrest that stems from pay disputes and COVID concerns. Have you seen the videos out of China? I mean, the workers at Foxconn were literally fighting with the police in China. Yeah, the videos are crazy. So this is one of the reasons why Apple dropped this morning, and then low volume is why Apple moved flat the rest of the day. Now, it'll be curious to see once volume picks back up on Monday, how investors, market participants will react to the news over the weekend, if there's any other news about Foxconn, or whether or not this was an overreaction due to maybe less experienced traders at the helm of these hedge funds if they were even open. Okay, so that's a possible reason for why Apple dropped this morning due to the Reuters report, and then traded flat the rest of the day, low volume. All right. Okay. I see your comment. Apple went down. Let's put it up on the screen so everyone can see it. Apple went down because, one, there's no volume, and two, it kept breaking the channel it went through support every time. Okay. Let me put that second one up there so everyone can see the continuation of the comment. It went right through support every time. Okay, so we have that. Now, let me clean this up. I want to go back to the daily view real quick. Okay. And then we have one more. Nice to have you on Twitch too. Glad you're watching. Okay, so if we go back here and look, Apple always causing breakouts. Yes, Apple can move, and it's very headline driven, especially right now. So if we go back and look here, you can see these big moves that Apple's had over the last, let's see, 1, 2, 3, 4, 5, 6 trading sessions. And like we talked about earlier, Apple's really been going nowhere over the past couple of weeks, but there has been some big volatility moves up and down over that stretch. We can see it. That's there on the 5-minute chart. And the daily chart, you can really understand it. You can see the candles going up and down and up and down and up and down for the past couple of weeks. So I thought I clicked the button. Did I not click it? Okay. Any Apple bad news just gets eaten up as always. Anyways, that is true. That is true as well. Now, let's open this up here. My goodness, looking at the bigger time frame here with several quarters, you got all of 2022 on here. Man, you almost think that maybe Apple could get back, if it got above its 200-day, that maybe it could get back up to close to break even for the year. Obviously, it would run into heavy resistance here. And of course, the Head and Shoulders from the summer or mid-August top there. But anyways, Apple would have to break that 200, and that's going to be sticky. That's going to be tough for Apple to break through. Okay, you can also see, before I open that chart up, the volume here. It has just been a sea of fluctuation like it has been for the year here, where volume is spiking as prices dropping, and then volume will drop off, it'll remain flat, and then we'll get FOMO, or at least there was around earnings, and now it's just been dropping off. But most of that is due to, of course, the holiday there at the very end of that drop off. So volume has been fluctuating, just like price action here is for Apple. Now, on a related note, COVID cases have been reported as high, which have prompted more lockdowns. And this is in China that I'm talking about specifically. And the reason I'm talking about this is because of the Foxconn problem with the employees kind of saying, hey, enough's enough. We're protesting, okay? With the pay disputes and with COVID concerns. So if the Chinese government is going to lock down, well, is that going to be good for Apple? I don't know, right? It's China, and China is a big part of Apple. So it's just something just to keep in the back of your mind. I mean, these reports about China have been fluctuating, zero COVID policy to China's going to open back up. It's even called oil. It's even caused oil to fluctuate dramatically because of what's being reported out of China. I mean, I think the news is starting to get a little redundant, right? I mean, it seems to be the either or headlines out of China for the past couple of months now, which isn't that great. Now, China did announce new stimulus measures, including more credit support for property developers. Go figure, right? One of their biggest property developers is having financial problem. And the People's Bank of China also announced a 25 basis point cut, not increase, but a cut to its reserve ratio for most of its banks, which will free up roughly $500 billion in liquidity for China. Okay, that starts on December 5th, by the way. Now, what this tells me is that the economy in China is hurting. And we've known about this. We've talked about it a few times on the channel over the past couple of months, especially since the developer crisis in China and the housing market problems showed up. Now, let's get back to our market and what's happening here. Let's go over to the SPX and let's keep talking about today. Not a whole lot, just a couple other points to talk about, and then I'm pretty much done with my notes for that. So if you have questions, keep them coming in. I'd be glad to talk about them. Okay, now the weekly expected move held up this week, which was great. Remember, the weekly expected move is the market, or the options market specifically, telling investors or market participants what the risk is in the upcoming week. And it's got a 68% win rate. So if we look here at today, in today's candle for SPX, and you'll see it for the SPY as well, is, let's open this up a little bit more. Okay, the weekly expected move on the upper end is the purple line coming across here. In today's candle, it went up. It didn't quite get there. The high was 40.34, where the weekly expected move was at 40.37. So that was held. It was in place. It didn't break above the weekly expected move. So count that off as another win for weekly expected moves. Now, next week, this is going to be curious, right? The 200-day moving average is coming down like so, all right? Let me open this up over here so I can get the data. The 200-day moving average is at 40.56, okay? 40.56 right now. Obviously, that is a fluid moving average, so it will adjust come Monday. But right now, it's at 40.56, closed at 40.26, all right? So 30 points away from that 200-day moving average. And then just above that, we have right here the down sloping resistance line of 2022. That down sloping line has stopped every major rally in 2022. Will it happen again? Well, I find it a bit coincidental that there will be a bunch of Fed speak next week, and one of the Fed officials speaking is Fed Chair Jerome Powell. He will be speaking, and will he say anything other than what he said for the past several months? That's what everyone will be listening for. Does he give a hint, a clue to what they're going to do at their December FOMC meeting, which you can see here on the chart as I move it over? We've got a signpost up here, FOMC. This is when the next rate hike decision will be made. We've got it marked on the chart. It's very interesting. Will the stock market continue to rise, maybe break above that 200-day, and then kind of slow down? Maybe price action will start to slow. Maybe volatility will take a break, and maybe we'll get a little wedging pattern with the downsloping trend line as the resistance, and I don't know, maybe the 200-day acting as support, possibly, as we go into the next FOMC meeting. And then we're either going to get a run-up, a Santa Claus rally, or maybe he comes out and says something that is very negative that the market is not expecting. What if he says, instead of going to 5% as the terminal rate or the top rate, what if he says 7, right? Or what if, because we also get inflation data this coming week, okay? This coming week, we get the PCE inflation read. And that is the Fed's staple read on inflation. If that comes in hot, maybe the talk of the Fed potentially doing a 50 basis point rate hike just doesn't come true. It will be interesting. So this week, that report or that data drop will be very important to what happens. All right, let's keep moving on. I'm going to go to, I've missed a few comments. My apologies here. Let's see here. The massive dip today was really predictable. Probably the only time I'll buy a put for the stock. You can see from the 23rd that there's a double top. See, as the market opens instantly, I bought puts. Oh, good. Okay. Was there a second one after that? Yes, there was, and more than one. Okay. Not double top. Sorry. Head and shoulders. Yeah. Perfect. Awesome. Let's see here. How big are Santa Claus rallies? 10, 15%? That big? Sometimes. It really depends on where we are in the market, okay? Are we in a bull market, bear market? There's a lot of factors that go into it. So let me clean this chart up here real quick, just to I'll give you 2 examples, the last 2 years. All right. Let's change this to a weekly view, okay? And I'm going to go back to December of 21 and December of 22. Now, you have to remember that these were bull markets, 21 and 22. However, let's open this up here. All right. If we go back to December of, and I'll show you with the Sharpie here so we're clear on it. It's right in the middle of the chart here. Let me bring it down just a little bit here after I open it up. Okay. If we look here, let's see, this will be the first week of January. Okay. So here's the first week of January. All right. And now let's go back to the first week of December, which would be, well, here's the end of November. All right. So if we measure December, okay, so where November closed, we'll measure from that, and then we're going to measure where December closed, and that will show us that was a 5.2% gain in December. Now, in December, the first week of December was a 3.8% gain, followed by a 1.9% loss, and then a 2.2% gain, and then finally a 0.8% gain. All right. So that was December last year, and we were just fluttering, getting to the top of the bull run. So things were starting to slow down. Now let's go back to December of 2020. Let me bring the chart up a little bit here. All right. Let's mark the same things. I'm going to mark the first week of January, which was this candle here. And then the last week of November. All right, which was this candle right here. And you can see here, the first week of December was a red, down just about 1%, and then a rally of 1.2%, a drop of 0.2%, a rally of 1.3%. So let's measure the close of November to the close of December, and it's a much smaller move. Just around 2.1%, okay? And if you want one more example, since it's kind of easy to just scroll back here and look, let's go to 2019, before the pandemic, all right? And we'll do the same little exercise. Let's go and mark off the first week of January right here, and the last week of November right here, and then measure. You probably see an average of 2%, I would probably imagine. Okay, let's measure the top of November, or the end of November there, and let's go to the closing of December. About 2.9%. So we can probably start to see an average starting to build here, somewhere around 2 to 3%. So not 5 to 10%. Although in a bear market, maybe if the conditions were right, being sold off as far as we are, and let me just go and show you, bottom right corner of your screen, I'm going to pull up where we are year to date for SPX, which is S&P 500. We're down 15.74% year to date. So if the conditions were right, if the Fed changed its tune and became dovish and said, hey, look, guys, in I believe it's February 1st is the first FOMC meeting for 2023. If they said, hey, look, you know, we'll probably hit our terminal rate at that meeting, the first meeting of 2023, meaning they'll go up by, let's say, 50 basis points in December and maybe 25 basis points in the first meeting of 2023. And then they're going to hold, okay? There's no cuts. There's no pivots. They're just going to hold the terminal rate high. Should fight inflation, okay? Maybe the market sees that as great news. The Fed is going to stop raising rates. This is wonderful. Maybe something like that could be a catalyst to send the market rallying. Who knows? 10%. I have no idea, right? But you can kind of see so far. Let me put one more in here. Probably a 2% average, maybe up to 3%. And then we get to 2018, and 2018 is a bad one. So if we want to include 2018, remember we talked about 2018 last week, and I was curious if we compare 2018 to where we are now. Inflation was high, the Fed was raising rates in 2018, and there was a big drop off. Look at this. Look at this. Let's do the same exercise here, where we will mark off the first week of January, which is right there, and the last week of November, which is right here. Okay, so just real quick, just to refresh your memory, we had this where, well, that's not, hold on, where we open up, okay, we close out November, and then we, for the first 3 weeks of December, we drop, okay? There's just about. It wasn't quite 3 weeks, but that was a 12.6% drop. And then a lot of that was made back up. So if we go from that drop until the end of December, how much did we make back up? 4.4%. So there, you're getting close to 5% on that. Okay, so let's measure where we open, or actually, my apologies, where we close on the end of November to where we close at the end of December, and we come up with down 8.3%. Okay, that was a very rough month. Fed was raising rates. Fed was hawkish at the beginning. Things turned around at the end. But that was a rough one. Could that be what our December looks like? There's a possibility. There really is. The Fed is the curveball that we have to watch out for. Okay, let's see here. SPY for 8 hours and waste. Okay. All right. Let's see. Yeah, Head and Shoulders. I got that one. Am I not getting the whole bother? I'm dipping. I'm gonna graph SPY for 8 hours and waste my life. All right. So let's get back on task here. So this was interesting, right? To answer your question about the 10 to 15%, no, not that high. Okay, let's open this back up and let's talk about just a couple of things. I really did not expect to even be going this long today, but I'm glad you're here. Absolutely. I wouldn't have it any other way. All right, bring it down, open it up. Okay. Now let's change this back to the daily. Now let's keep going on. All right, for consumers, the day after Thanksgiving usually equates to searching or shopping for Black Friday deals. This didn't register much for retail stocks, however, and that's evidence, and we'll pull this chart up here and talk about it. And then I'll come back, we'll look at the SPY and so forth. I'm just going to get done with my notes, and then we'll come back and do the charting for the SPY, the Q, the IWM, to show you where we could potentially be going now that December is upon us, right? We're really, really close. Okay, the ticker symbol is XRT. This is the ETF for tracking retail. Now, when I said it didn't register with retail stocks, that's evidenced by the retail ETF, ticker symbol XRT, losing about 0.1% today, okay? So if it was real hot for retail stocks, you would have seen this ETF go up today. It didn't. Now, since it barely registered a drop, though, less than 0.1%, there were some retail winners. I think Walmart will end up being a retail winner this year. I think your luxury brands probably not as much. But look at this. This is interesting. The 200-day moving average here, all right? Right here, boom, resistance. Right here, resistance. And that's a doji star type candle where you run up, okay? Let me show you this on the chart, okay? Where you're going up, and then you get a doji star, and then you're going to come down, okay? So here we are going up, and doji star, okay? So potentially a gravestone doji, all right? That is bearish, okay? You're going up, 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 up. You get a doji, and then a reversal off of that is the probability, okay? Not guaranteed, obviously, but that is a probability for the retail ETF. Again, XRT. Now, this lack of participation today was also reflected with the S&P 500 sectors. None of the 11 S&P 500 sectors moved more than 0.7% in either direction. The biggest move was XLC, Communication Services. It lost 0.7%, which was weighed down by Activation Blizzard. Let me pull activation up here. ATVI is the ticker symbol. The reason Activation Blizzard dropped, and it dropped 4.1% today, you look at that. Whew, big drop. The company sold off on news that the FTC may file an antitrust lawsuit to block Microsoft's can't believe I was about to say Activision acquisition of Activation Blizzard. So that's why Activation Blizzard dropped 4.1% today, because of the potential lawsuit against Microsoft, who is the acquirer, and the FTC may bring that lawsuit. So that's why it dropped today. And again, big moves on low volume, right? It can happen. But look at this. What was the volume for today for Activation Blizzard? If you look at the volume at the bottom, we can see a spike right above that moving average. 9.1 million trades today, okay? The average is 6.3 million. So even on a low volume day, you can have pockets where you do have a burst in volume, all right? Just as an example here. Now, on the flip side of the losers today, you've got real estate, XLRE, and utilities, XLU, both up 0.6%. So they sat atop the leaderboard today. Treasuries, let's talk about that, and then we'll talk about the dollar, and then the SPY, Qs, and IWM. Now, for the 10-year, it sat at 3.65% overnight. Well, it sits at 3.69 right now. So on the day, you can see it was up 0.76%. It's trying to hold this support right here, all right, which is right about the top of that 3.65%. Now, when the 10-year goes down, usually equities go up. But look at today. We have the dollar going up, equities go down. We have the 10-year going up. Did I say up? I meant down. The dollar went up today. The SPY, the SPX come down, as expected. It wasn't equal, though. When the 10-year goes up, well, that means the Qs come down. The 10-year was up today. The Qs were down. Just about equal trading positions. Now, we could say we have this downsloping resistance line followed by a flat support line after selling off and coming down. Where have we seen that? Okay, let's go to chart patterns. We want, and let me clean this up here real quick. We want down and then right here, descending triangle. Okay, it's neutral. We have the down, the move down, the expansion down, and then it's prices contracting, where it's got a flat bottom and it's got a descending resistance that can break either way. It is neutral. That's what we have right here with the 10-year. This could break either way on the 10-year. And a lot of that is going to have to do with whatever the Fed decides to do. Okay? Now, the 2-year, let's pull that up here real quick. The 2-year was at 4.43% overnight, but it sits at 4.46% right now. Pattern moving sideways. We could potentially have a head and shoulders here for the 2-year. This being shoulder, this being the head part, and then we are forming the shoulder right here. That's a possibility for the 2-year. All right, going to the dollar. DXY is the ticker for the dollar. Okay, here we have that 200-day. We've been talking about this for a while now. The 200-day moving average is coming up, and guess what? It nearly tagged it today as support, but we've got a spinning top here, right? And let's go look at that. The spinning top, candlestick pattern. It was a green spinning top. This is bullish right here. So if it's a bullish signal for the dollar, that's negative for equities, right? Because of that inverse correlation, okay? That inverse correlation that the dollar has with the SPY and SPX. So does that mean the dollar's turning it around? It's a possibility for next week, okay? Especially with inflation data coming out and Jerome Powell plus other Fed officials coming out and speaking. All right, let's go to the SPY here. Now, as this chart loads, remember today there was no economic data at all, but next week we get housing market data, we get inflation data, we get employment data. So it's a big data heavy week next week, and then that's followed up by the Fed. Plus, this week with the housing market, inflation, and employment data, we get Fedspeak, including Jerome Powell, who is the Fed chair, all speaking next week. Okay, on the SPY here, let me pull the chart down and get it in place here. You can see the upper end of the weekly expected move held as almost resistance. It almost touched it today. We just are right there, getting really, really close to that 200-day moving average. That 200-day moving average is at 404. All right. The downsloping trend line that has cut off every rally of 2022 is right there above that 200-day moving average. Are we going to work our way up to it, or are we going to get rejected before we even make it to that trend line? That's the question. And the data next week, that's going to be the deciding factor. All that data that comes out next week from housing market, inflation, employment, Fed speak, and Fed Chair Powell speak. Okay. All right, let's go look at the Qs. So not looking so good. We're getting close to that resistance overhead. However, a lot of data next week. All right, now for the Qs here, and then I'll wrap this up with the IWM. The Qs here, they're a little further off from that downsloping trend line, right? And they haven't even made it past the point of the 50% retracement level where the SPY, the SPX, the Dow Jones all have. All right, so the Qs have been underperforming there. We could put a downsloping trend line right there. We could potentially lock here and go up like so, where we're having another triangle pattern. Or there's another way to look at this too, is we could potentially have a flagging pattern here where it just broke that line one day out of the past several days, or several sessions, I should say, where we had an expansion move up. We are flagging, which means we could be moving to the upside. Okay, so there's two ways of reading this right now. Okay, let's go to the IWM. This is your small caps. Let that chart load. I'm going to bring it down a little bit. You can probably already see a little bit of wedging here on the daily view. Now, the downsloping trend line for the IWM right here, okay? November 15th, it broke above it. It closed above it. Very next day, dropped down. And then you get to today, all right? And then this trend line continues like so. You get to today. And today, the IWM closed above that trend line again. Second time in as many of weeks. Plus, it closed just pennies above its 200-day moving average. All right? Just pennies above its 200-day moving average. Could the IWM be looking for a breakout? Well, we could probably draw a trend line here, down sloping, because it's really just following along there. And then what do? Do we come flat across like so, where we had this uptrend, down sloping top, flat bottom? Uptrend, down sloping top, flat bottom. Well, maybe it's not so flat because there's really not a pattern here that reflects that, except for a symmetrical triangle. Does that look like a symmetrical triangle? Not really, okay? Not unless, instead of connecting it there, which is kind of weird, there is no confirmed on the daily chart here unless we go to a smaller time frame on what could be setting up, right? You could probably, well, hold on. We might be able to run up like this, okay, and just have the support structure there a little bit on the shorter side while the top is down sloping. Then we have an ascending support line. Yeah, that's wedging, okay? That's wedging. What's the play here for small caps? Are small caps really going to break out of this thing and keep moving up? I don't know. I don't know if small caps have it in them, right? The data next week is going to drive this market. That's the biggest point here, okay? Volume today was so low. Look at this on the IWM. The average trading volume for the IWM, which again is your small caps, is 25.4 million trades every day, all right? Today's volume was 13.3 million trades. So not quite half or not quite 50% right down the middle, or just a little bit under that. But still, that's a significant drop off in volume. And if you look here, volume has really been dropping off. We can go from this point right here, November the 10th, and volume has been dropping. We can basically follow the average volume trend line there, and it's been going down. So over the month of, or at least the past 2 weeks, maybe even 3 weeks, investors have been losing interest with small caps. And that could be because you have a lot of small caps making 52-week lows, and then you have some small caps getting short squeezed, and you have some small caps that are, just kind of hanging around doing nothing because of the low volume. Okay, so some interesting things to look at. I've gone through all my notes already. So if you have questions, now's a great time to ask them before I wrap this live stream up. But I do want to show you mid caps here real quick, because mid caps had a pretty good day. They were up 0.5% on the day on really low volume again. So average volume for ticker symbol MDY, which is your mid caps, 745.9 thousand trades. Okay. Now today's volume was 274.6 thousand trades. So we're looking at almost 300,000 versus 750,000. Big drop off, but still was able to move up 0.5%. Now, mid caps, I didn't mean to do that. Mid caps are above their 200-day moving average. All right. But they did close within the weekly expected move. All right. Up top, the weekly expected move was 481. There is resistance when you get to that level, but it's not there yet. Now, you could see a rising wedge here. Okay, if we put a trend line on here, like so, and then we trend line across the top, we've got a rising wedge right here. And let's go look real quick at the chart pattern. When we have a rising wedge, that's right up here. Typically, that means we're at a top, okay? Because you can see that we went up. Oops, I didn't mean to do that. We're going up. Oh, come on. We went up, price is consolidating, and then it typically breaks down, okay? So a rising wedge, you see that where we went right here, where we had expansion up, and now price is contracting as it moves higher, and that could be a signal that we are going to get a breakdown from that. That's a possibility. Last question. Did you buy anything for Black Friday? I did not. Nope, I did not. I typically am usually done by the time we roll around to Black Friday. I bet you were hoping the answer to that question was a new computer. But no. Did you get anything special for Black Friday? And if that was, let me parse that off into two categories here. Did I buy anything for Black Friday, as in retail? No, I didn't. LOL. Gotcha. For Black Friday deals, no. Did I buy anything on the stock market? No. There was nothing really on sale that I didn't already have. Yeah. Yeah. Sometimes, when you, how do I put this? I don't like to buy stuff just to have stuff. If there is a utility for it, sure. If it's I just want this because I want it, I'm not typically going to buy it. That's not typically how I'm thinking about things. I'm trying to think of the utility of it. What am I going to do with it? And if I'm not going to do anything with it, why spend the money on it when I can invest that money? So that's my thought there. Even on Black Friday, sure, you might Oh, that'd be cool to have. Oh, it's on sale. That's interesting, but there's no utility for it, and it's just going to sit around after you get bored with it. I don't know. I'd just rather invest it. So, okay. Well, is there anything else you guys want to chat about or mention? If not, we can. Oh, there's a good question. Sorry, I missed it. I didn't notice that one. Make a play on Walmart. Let me pull that up right here. Walmart's an interesting one. I do think Walmart will be a retail winner. WMT is the ticker there. I do think Walmart will be a retail winner because I do believe that more people are going to try to find deals this holiday season instead of just buying whatever they want, because many people know a hard recession is coming, right? The Fed's not going to be able to do a soft landing. At least I don't think so. So I think owning Walmart on a pullback is good. So if we're looking here at the chart, Walmart's had a nice run. Remember when we looked at the retail ETF and it was barely even down 0.1%? Well, this is why Walmart is up 0.4% today. Walmart has had a big blast since earnings, 6.5%. And now it's starting to reach a point of resistance. Walmart needs to pull back. Okay. But I think if Walmart pulls back, and I mean, look at this. I mean, it's been disconnected from its 5-day moving average or its 5-day EMA for days now. 1, 2, 3, 4, 5, 6, 7, 8. It's been disconnected from its 5-day EMA for 8 trading days in a row. 1, 2, 3, 4, 5, 6, 7, 8 trading days in a row. It needs to pull back. So I always think of that 5-day EMA as like a circuit board, and it's running right there under the candles. It came close on November 17th of touching that, but it didn't. So that circuit, it's open. Electricity cannot flow freely through it. So Walmart's got to pull back. It's got to break down here shortly. It has just been going bonkers. So I would go to buy Walmart, but it's got to come for a pullback. And if you look, my goodness, I mean, this just sets it up right here. This breakdown right here, right? This big gap that was open right here. I mean, that just that showed you that once Walmart broke out from this resistance line right here, that it would just rocket up, and it sure has. And then a couple gaps further down, but those don't matter because those were already filled in. But goodness gracious. So looking at Walmart here, this is the daily view. Walmart's at resistance right here, right here, and that's where Walmart is. Right, Walmart's going to pull back. There's no doubt in my mind that it's going to pull back. So these are my thoughts. Do your own due diligence, but I think it's going to pull back. I wouldn't jump in here for long, that's for sure. Let me just pull it back a little bit further. Yeah, even right here, same price point. You got all that resistance there. There's one time going back right here since November 2020, 2 years ago. This has been the resistance for 2 years. We have April. We have a break above it in April, and then it pulls back down to that price point in May. That's the only time price has been above this mark, right about, what do we want to call this? The top of this is right at 153.14. And we closed at 153.07. So literally 7 cents away from the top of that trend line, resistance line, I should say, not trend line, but a 2-year resistance line for Walmart, and it's 7 cents away from that. And it's only broke that resistance in 2 years. One time in 2 years, it's broke that before. That's just incredible. That gives you some perspective right there that I think it's pulling back. So let's see here. Wow. Let's see here. It broke through the line today. I could see it impulsing, then pulling back. I'd have my money on the pullback. Yeah, let's put that up there. Yep, I definitely think it's going to. I mean, it just, a 2-year resistance line is just so hard to break through. You need the momentum, and I don't think next week, is going to give us a ton of momentum, because if the PCE price index shows hot inflation, or hotter than expected inflation, if Fedspeak is hawkish, if employment data is good and still shows strength, those are all bad things for the market. And of course, Fed Chair Powell and what he could speak about. All right. Cool. So taking a short position on Walmart, I'm actually going to write that down to watch Walmart for that. If Walmart does get momentum, and I do believe one of the analyst firms today put Walmart on one of its list of buys. I can't remember off the top of my head which one did, but I know I saw that notice today about Walmart. That could have given Walmart its little extra boost for today, even though volume was light on the day. Looking at volume today, the average is 7.1 million, but there was only 2.9 million trades. So almost a 60% drop there in trading activity on the day, which is expected. All right. All right. Just put Walmart on the short possibility list there, because it's there. It's there. All right. Anything else, or we can wrap this up for today, and you can have a wonderful weekend like you guys always do. I am sure of it. Okay. All right. Well, if you're good, I'm good. I'll just give you another minute here. And then we can, all right. Well, all right, we'll wrap it up here. I got my eye on the comments in case one comes in while I am saying this. If you could do me a favor and click that like button, share the video with a friend. Those two things greatly help out the channel. Awesome. Well, we will wrap it up right now. So thank you, ladies and gentlemen, for joining me today. I greatly appreciate your time being here, and I'll be back on Monday after the market has closed to talk about what happened, why it happened, and what to expect going forward. So you have a wonderful weekend, and I will see you in the next video. Take care.